Oh, bonsoir tout le monde. Good evening, everyone. Thank you so much for joining us this evening for the second edition of Fintech Drinks. Hello, for the people who are watching from home, thank you for joining us. My name is Nina-Mae. I'm the head of partnerships at Fintech Cadence, if you don't know me yet. Before we begin, I would like to acknowledge that this event is hosted on Indigenous land. The Ghanaian Gahaga Nation is recognized as the custodian of the land and waters on which we gather today. Tiohtià:ke, also known today as Montreal, is historically known as a gathering place for many First Nations. We do this to reaffirm our commitment and responsibility in improving relationships between nations and improving our own understanding of local Indigenous peoples and their cultures. I'm really excited to see everyone here with us tonight. In a few minutes, I will be discussing fintech in the sustainability sector. We have an incredible panel for you guys tonight. So I'm really excited about that. I want to say cheers, as is a tradition for Fintech Drinks. Cheers to people who are watching from home. Cheers to everyone who came after a long day of work. So santé tout le monde. Merci beaucoup d'être avec nous ce soir. So I have a few admin to go through before we start. First, I'll do a quick introduction about Fintech Cadence. If you guys are not familiar with who we are lucky that all our Fintech Drink sponsors are in the house tonight. So they're gonna, they're very excited. Had a cocktails already. And then I have one announcement to make, and then I promise we'll get right into the discussion. All right, so Fintech Cadence, who we are, we're a nonprofit, started in 2017, and we are Canada's Fintech hub. Our mission is to advance the financial sector to serve all the Canadians for the better. We're able to do this by focusing on 3 pillars. The first one is education. So we introduce talent to the world of fintech. The second one is supporting early stage fintech startups. And finally, the third one is the collaboration work that we do with financial institutions and other stakeholders in the ecosystem. We have 5 programs. The first one is the Fintech Certificate, which serves as an introductory course for professionals and university students alike. Our Ascension program is a 3-month incubation program specifically designed for early stage fintech startups. We have our Fintech Case Competition, where participants work on solving real industry challenges. Our IFH Lab, which is starting next week, so don't miss that out. It's a 6-month incubation programs for startups that improve the financial lives of Canadians. And finally, our recently launched Fintech Hub, which is an inclusive rolling admission program to support fintech startups when they need it. We host 3 types of events. So our Fintech Drinks, which serves as networking opportunities for the community. Clearly, people are happy to be back in person and see one another. So really happy to see the great turnout tonight. We have our university series where we go speak to university students across Canada to introduce them to the wonderful world of fintech. And finally, our career fair where we match job seekers with employers in the sector. All right. Fintech Drinks are possible thanks to our amazing sponsors. First, we have our champion sponsor, EY. And from EY, Nassim Benasser, that's you. Nassim Benasser, Senior Manager, Private Client Services, Business Tax Incentive, is here to say a couple words.
Hey guys, happy to support Fintech Cadence and Fintech Drinks. We really love entrepreneurship. We love ESG. We have a very large climate change and sustainability practice in Montreal. So there's a few of us in the room. So please do come and chat with us after. Thanks.
Thank you very much, Nassim. And now we have our friends from Tories who came straight from Toronto and Ottawa to come and be with you guys tonight. From Tories, I'd like to welcome Brigitte Goulard, co-head of Tories Consumer Protection Practice and Fintech Group.
Thank you. Thank you very much. I'm really pleased to be here tonight with my Tories fellows here. Tories is a firm with offices in Montreal, even though we are from Toronto and we have here someone from Montreal. And we serve the banking and fintech industry. And I'm really pleased because last week I was at a conference and there was Chris Skinner. I don't know if some of you know Chris Skinner, who's very well known in fintech. And there's a new book coming out talking about digital with for purpose, digital for good. And they were saying if you don't stand for something, then you're going to fail. And I believe here that today with the ESG, it's all about standing for something in order to succeed. So, Tories, we'd like to be able to help you. So feel free to grab us while we're having drinks later to ask us some questions.
Thank you. And as you guys can see, Fintech Drinks is hosted at the beautiful Station Fintech this evening, who are also our sponsors for these events. From Station Fintech, I'd like to welcome Mathieu Lambert, Director of Fintech Development at Station Fintech.
Merci beaucoup, Nina. Bonsoir tout le monde. Donc, j'ai essayé d'épargner nos speakers ce soir en parlant avec ma voix la plus grave possible. So, hi, I'm Mathieu Lambert. I'm the Director of Fintech Development for Finance Montreal and this beautiful Montreal Fintech Station. So great to have you here and to see some people coming in finally after those years of COVID. As you see, it's a place where we want to host people in the fintech space, especially, of course. I would also like to underline the presence of other people from Toronto tonight, some startups that are in our accelerator right now. So thank you for being with us tonight. Peter, Paul, Alec, I'm sorry if I'm forgetting someone. L'autre personne dont j'aimerais souligner la présence, c'est notre tout nouveau collègue à Finance Montréal, Louis-Philippe Allard. Donc, si dans la période de réseautage, après, vous voulez aller connecter avec lui, il est aussi directeur FinTech à Finance Montréal. So, and last thing but not least, this Thursday at noon, we have our demo day from our accelerator. So if you'd like to join online, go on our website. There's a link to register. So we're going to have the 8 startup pitching. Finance Montréal, a big part of what we do in the fintech space is to create connections between our corporate members and the startups, and the accelerator, Station Fintech, the Canada Fintech Forum are all ways to accomplish that. And finally, I'd like to thank Fintech Cadence for being here. We have a long history of partnership together. It's always great and very complementary missions. So have a good night, everyone.
All right, you guys, last announcements, I promise. Okay, but it's an important one. So Desjardins, in partnership with Fintech Cadence, has launched a call for application to all paytechs. So if you know early stage fintech in the payment sector, send them to our website. We are taking applications up until May 24th. They have a chance to win a $15,000 grant and a potential investment of up to $250,000 from Desjardins Startup en Résidence. So make sure to check that out. Tell your friends, tell your auntie, tell everybody to come and support the paytechs. All right. Okay, onto the panel this time. This one is true. All right, so we're talking fintech and sustainability tonight. We know that companies are increasingly being scrutinized on their impact on the society from an environmental, social, and governance standpoint. The financial sector, as we know, is a pillar in our society and has a really large influence also on the impact that these practices put in place for a sustainable Canadian economy. So tonight, we'll be discussing the role that fintech plays in the ESG space and how they provide solution to some of the key challenges in the sector. Also, just to let you know, we'll keep hopefully a little bit of time at the end for some questions, Q&A. Online as well, if you have some questions, type them in the chat. We are also keeping track of who's there. All right, so I would like to welcome Marie-Josée Privyk, Chief ESG Innovation from Novisto. Yes, please come and sit with us. I have, I'm gonna move. Maybe that's better. There you go. Katerina Kindyni from EY, who's a Senior Manager Consulting Financial Risk Management. And finally, Vanessa Allen, she's Vice President, ESG Research and Engagement at TD Asset Management. All right, thank you so much. This is an all-female panel. Thank you for joining us. If you could please do a quick introduction of yourself and your role at your respective company, maybe starting with you, Marie-Josée.
Sure. Hi, everybody. Nice to be here. Thank you for inviting me. My background is capital markets. I have a finance background. CFA was in sell-side analyst head of research for many years in the first career. I was also director investor relations for a publicly listed company for a number of years, and that's where I kind of fell into the whole sustainable development, sustainable finance space about over 10 years ago, and never looked back. And that led me to do some advisory to help companies with their ESG disclosures, reporting, and ultimately to Novisto today, which is an ESG data management software platform. I'm Chief ESG Innovation Officer, so responsible for monitoring the crazy busy space that is changing at warp speed and reflecting that in our product development and developing a solution for companies' ESG data needs.
Thank you, Marie-Josée. Katerina?
Yeah, I can go next. Hello, everyone. To see you in person. My name is Katerina. I'm a senior manager at EY. I lead our sustainable finance, climate risk, and risk management practice. My academic background is in mathematics and statistics. I used to work in the banking industry in the UK for a global bank, running, stress testing models, developing models for the bank. And this is what I bring to the table. How do we measure, the impact, the financial losses coming from climate change? So I support our clients here in Canada and across the globe to define their net zero strategy, set up their targets, and then implement and execute their strategy. So I'm very happy to share my expertise, and and I'm happy to be part of this great panel.
Thank you. Vanessa?
Hello, everyone, and thank you very much for getting us out of the house. I'm very happy to be here. I'm with TD Asset Management, and there I sit on their ESG research and engagement team. And it's a team where we're focusing on our portfolios, trying to understand the ESG risks and opportunities in our portfolios, assessing the various the laggards within our portfolio and how we can engage them, how we can use our proxy voting in order to push them to do more. And so prior to coming into the investment industry, I actually was in public policy back in the States. And there I focused on analyzing policy in the Milwaukee area and how the policies were impacting local government. So it could be school districts, cities, counties, and how those policies impacted communities. So sort of have a diverse background, and I brought it to the investment world, starting looking at government investments. But now I think with sustainability, policy is a big part of that. And so we're focused on companies in our portfolios, but also we do engage governments on different aspects, including climate.
Thank you, Vanessa. Thank you all three for being with us tonight. I'm going to start with a quick rapid fire chat questions. So Marie-Josée, what's the recent ESG success that you're really excited about?
For our firm or in the market in general?
In the market in general.
Oh my God, the
Pick one.
ISSB Global Sustainability Disclosure Standards that are coming out that are hopefully aligning corporate disclosure to provide the market with better decision useful investment grade information that investors can use in driving capital allocation decisions.
Very interesting. Thank you. Katerina?
Couldn't agree more, but to add to that, in order to be able to disclose, we need to be able to measure, right? So one of the research development is around how do we measure financed emissions so we understand our baseline, right? So, and we're supporting financial institutions to follow the Partnership for Carbon Accounting Financials. Of course, the methodology doesn't cover the entire portfolio yet, but it's a really good starting point. So
I would definitely echo that. She totally stole my thunder. But I also think that's a big win for Montreal because one of the head offices will be here. But I think with that, it's just proof that there's a lot of collaboration to advance that discussion. And I think that's also a big win. It's on the standardization of ESG metrics, but also just pushing companies to do more. It's far more mainstream than before, which is why we are where we are with ISSB.
Wonderful. Thank you, ladies. All right. So ESG requirements, as we know, are highly driven by consumers, investors, and other stakeholders like governments. And they have been increasingly on the rise over the last few years. The requirements for businesses to operate ethically has been reshaping the way they operate. And the financial services industry is no exception to that. So based on your respective experience and focusing on the financial sector, what's the number one area that you've seen the most improvement? Maybe you can start with that, Vanessa.
I think maybe I'll go back to that collaborative effort in terms of one of the biggest asks from TCFD around climate scenario analysis. As an investor, that's something that we're focused on significantly, and we need that drive to do more on the climate front. So I think that is a major point that we concentrate on and a point of progress in terms of the conversation and tools being made available, but work still needs to be done.
Absolutely. Anything to add, Marie-Josée?
No, let you go
Katerina?
first.
Yeah, maybe for me, I think one of the biggest contributions of ESG is the fact that now we are focusing in the financial industry, we're focusing a bit more on the long-term value creation rather than short-term gains. So it's about, stakeholders, not just about shareholders. So that I would say.
Yeah, I don't know where it can go so many different directions with this question. So, I mean, in terms of improvement, I would echo the fact that I think what's really encouraging to see from the market is convergence on this is a paradigm shift. This is a required, necessary change in how we do things, how capital is allocated. It's happening at every level. It's happening at the government level, at the investor level, institutional investor, but also at the individual consumer investor level. We do have a role to play as individuals. And companies obviously have a role to play. They're not the only constituent to have to change their behavior, but they're an important one, obviously. So I think this great convergence on the need for change, and I think climate is the poster child of sustainability right now. It's the issue everybody's talking about. It took many years to draw our attention to this systemic risk, and now we finally understand it as a systemic risk, including and especially the financial sector, which is great. And so we are converging on, the need to act and then common objectives. And so working together in the same direction towards achieving those objectives. We need to do more. We need to go faster. Climate change is going to open the door to all the other sustainability related issues, but it's definitely painting a picture or drawing a path. Yeah.
And as a bit of a follow-up question on that, and maybe Katerina, I can direct this question to you. How do you think Canada positions itself in terms of ESG initiative in comparison to other international markets?
I think Canada has made some really, strong and ambitious commitments, which it does make sense because based on research, Canada will actually have to put double the effort to achieve the 1.5 degrees Celsius, which is the Paris goal, right? Now we see, as it comes to the regulatory agenda, we see that Europe is further ahead, right? We see, the EU taxonomy. We see, already now the European Central Bank, they're already running the second generation of stress testing exercises. They already have, mandatory TCFD disclosures. But definitely, Canada is, has a plan. In the 2022 budget, there was an announcement that in 2024, OSFI will suggest, mandatory TCFD disclosures or climate disclosures that follow the TCFD guidelines, which is a great step forward and to avoid greenwashing, to make sure that we have better quality data, because in the end of the day, this is what we need in order to measure, quantify, monitor, and assess our progress against our goals.
Absolutely. Vanessa, you wanted to add something?
Sure. When it comes to Canada and progress made, one initiative that is newer, just beginning, is Climate Engagement Canada. I know a lot of people are familiar with Climate Action 100, and that's something that's focused in the US, but there are some Canadian companies that aren't part of that large investor engagement effort. So Canada is taking initiative when it comes to pushing companies, and investors are getting behind it and using their weight to get the companies to move. So I think for Canada, that's a big step forward in pushing this agenda.
Yeah, I could add maybe a few complementary perspectives. I mean, again, broad question. Canada's doing okay. Canada's in the game. I mean, from a government perspective, we have sustainable development laws and policies. We have incoming regulation for the financial sector. We have an issue with the fact that we are a natural resource extraction based, fossil fuel based, not entirely dependent industry. Obviously, it's not a majority of our industry, but we do have an important natural resource sector, and we're going to need to transition and help that sector transition. So we have extra work to do. We have a great network of institutional pension funds that are very proactive in responsible investment practices. We have a thriving responsible investment association that has grown exponentially in recent years. And so there's this mobilization. I mean, Quebec and, Finance Montréal has the ambition of being the leading sustainable finance ecosystem in North America by 2030. So we have some ambitions in that respect. ISSB having one of its headquarters here in Montreal is a big win for us. CPA Canada super involved. Companies are disclosing. The largest companies are disclosing, but Canada is an economy of small mid-cap companies. And when you start to go down in terms of size, a lot less companies are reporting. And so if they're not reporting, you wonder, are they managing those issues, whether it's climate change or other issues? So there's, still a lot of work to be done. So
yeah, and that's actually one of the questions that I wanted to ask the three of you, because one of the main challenges in the space is data collection and analysis and benchmarking, especially. So maybe on a positive side, maybe you see some interesting fintechs that come and support and fill this gap, and you can maybe also highlight where there's still room for improvement. Maybe some startups idea for the people in the room as well.
In terms of just room for improvement for Canada, I think that there's a long-awaited taxonomy, given that it's a resource-intensive economy. So I think that once there is a taxonomy, there could be more investment vehicles that we get behind, and there's more optionality, because right now in Europe, their taxonomy doesn't quite fit where we are, what our economy is based on. So as investors in Canada, we want to see companies transition. We don't want to just block them out and consider them non-sustainable. They are part of this transition as well, and we want to push them further. So I think that the taxonomy, it was expected in 2021. There's been some delay, and I think getting that advanced is going to be a critical component.
I couldn't agree more as it comes to the fact that, and I think this is supported also by SBTI, the Science-Based Target Initiative, which is, it's not around not having the exposure in your portfolio, it's around helping different sectors and clients to transition, because this is how you really contribute to the economy. Now, as it comes to, maybe I will split that into two main sections. The one is, what are the main challenges that the financial industry faces at the moment? And then the second one, maybe the ones that they want to lead the way, or, ideas for startups. I think that's, maybe slightly different. So on the first one, main challenges, anything around data, right? Data quality is poor in that area. And now one of the, main concerns of financial institutions is around actually ISSB disclosures, because they say, yeah, I have calculated my financed emissions, but it was based on proxies. Only publicly available companies had, information around their emissions. If it has to go into my financial statement, I need to put more time and effort, right? So data is a big challenge. And the methodologies has not been fully defined yet. They cover part of the book. So these are the two main challenges in the financial sector, among others. And then now ideas, for startups, or where we should focus, as leaders. So I will focus a bit more if you think about where do we have high green premium? Or in other words, it's more around where do we see opportunities that at the moment the cost of decarbonizing is very high? So this is an opportunity for us from a research perspective to go and tackle and come up with ideas to make it more affordable. And as a result, if it becomes more affordable, it will be available to more people. And then this is how it can help us to net zero. So that's the way. The same logic can be applied to, if you think about the industry sectors, which are carbon intensive, let's, try and come up with ideas on how we can help those sectors to decarbonize. So that's the logic that I will follow if I had a startup or if I...
I'll take maybe a slightly different road. You talked about data. Data is a huge challenge for sure. And it's a multi-level challenge. There's availability of the data. There's a lot of data that just isn't out there yet. Companies aren't collecting it. And so you were referring to, a lot of the emissions right now are estimated emissions. And so, how reliable are estimates? They're incomplete. So companies are disclosing on parts of their operations, or when you think about scope 1, scope 2, scope 3, we talk about that a lot, right? And the emissions in your supply chain, upstream, downstream, it's just not there. So if you're not measuring it, it's difficult to manage. What gets measured gets managed. It's an old line, but it is still very, very true, very applicable. So there's availability. Then there's, quality, garbage in, garbage out, quality in, quality out. And so the need, and from a fintech solution, technology solution, the need for solutions to help companies collect data that today, by and large, is unstructured. It lives in spreadsheets, in emails, in Word documents, and quote, in people's heads. So there's a need to collect this data, to structure it, to digitize it, because when it's digitized, you can do stuff with it, you can analyze it, you can dashboard it, you can send it out to other platforms, do stuff with it, transform it, and gain insights from it, better manage your issues. And that happens to feed disclosures. There's a lot of work being done around not only digitized data, but tagging data, some different. So we're talking about XBRL tagging. For that, you need taxonomies. So, it's complicated, it's hard. And companies are needing to face all of that because they're being asked, not least of which by investors, to provide this data, because investors needed to calculate their portfolio level performance, because that's what they're being asked to disclose. In North America, it's by and large voluntary. In Europe, it's regulated. Investors must disclose this data for their portcos, and they just don't have it. So I think any solution around data collection, data quality, interpretation then also of the data, analytics of the data. And the other challenge, sorry, I'm being very lengthy, but it's just, press a button and it goes, because there's so much to talk about. The other issue, when we talk about data, I'll open the door, maybe we talk about that, is there's company level data that comes from the company, and then there's macro level data to measure impacts of all of these sustainability related issues that have nothing to do with the company. They really come from whether it's satellites or big data analytics and things like that. So we're needing to combine different sets of data to gain these insights. So I'll leave it at that.
If I can add to that, in terms of what is disclosed and the verification around what's disclosed, one developing conversation, especially given ISSB and the ISSB's focus on the interconnectivity of sustainability information and their audited financial statements. For me as an investor that engaged with companies, to have more information around what data, what disclosures are verified and to what level, I won't go into the types of verification, but if I could have more information as to what verification has been done around a company's data, I can then say, okay, I see now the gaps, and I can engage differently with a company, because now I'm informed with more data to say, okay, this company could go a little bit further when it comes to the controls that they have around these disclosures.
And I guess that's the purpose, and this is where mandatory, disclosure will help in that direction. So you will know, what is available, what has been audited, and that will eventually, drive better business decisions. And also the key to that is that it's actually coming from investors, right? The pressure is coming from investors, and then the regulations are coming to support the pressure from investors because they do need to make better, business decisions.
And we often talk about the, in response to this need for more and better information, we talk about it, information that is available, comparable, and reliable. To be available, it has to be regulated. In other words, regulations are going to tell companies you need to disclose this. But for it to be audited, externally assured or audited, it actually has to be standardized. And so this is where the standards come in. And also the digitization. Digitization makes auditability a lot easier. And so that's part of the digitization drive. And what we're actually seeing is regulations are saying both. Regulations are saying you have to disclose, and you have to disclose using this standard, which is why there's so much hope for people who are in the space with the ISSB. ISSB, by the way, is the International Sustainability Standards Board. We get accused of using acronyms a lot. I learned a new one this weekend. It's TLA, which is 3-letter acronym to criticize the fact that there's too many acronyms in our business. But anyway, so the ISSB is actually a board of the IFRS Foundation, IFRS International Financial Reporting Standards. So this is a sister board to the IASB, and so financial and non-financial are coming together in the same organization. And I think that's critical. This connection to financial performance and value creation, I think, is also a huge area of opportunity for fintechs.
But you guys are all touching on super important point, which comes back to regulations. And then we mentioned in Europe there is. What are we waiting for here in Canada? What's the hold? Or are we just heavily relying on the private sector to worry about their reputational risk, or to, they want to sleep well at night? What's the hold here?
Yeah, well, Europe has traditionally been more regulation driven, whereas North America has traditionally been more market driven, quote unquote. However, the SEC has proposed disclosure rules for climate related issues out right now for comment. They've actually extended their comment period because they've received more than 8,000 comment letters. There is obviously huge interest in the market. The Canadian Securities Administrators also has proposed regulation for climate disclosures. They're a little bit slower going. They were a little bit also, slower on the scope of implementation. It'll be interesting to see how Canada responds to the SEC disclosures.
And there's several parallels between the SEC climate initiative and ISSB's climate disclosures. So we're looking at both of them. Investors are weighing in. They're both in comment periods. So there is regulation or discussion on disclosure at those levels as well.
What I want to add maybe is that it's a different approach, right, as well. So in the UK, it has been much more aggressive, right? The Bank of England, they released a scenario. They were expecting the banks to develop models and produce output. Whereas in Canada, the Bank of Canada decided to take a more collaborative approach, which is not wrong, right? They said, instead of pushing financial institutions to go and develop approaches, let's collaborate. Let's, identify, 2 banks, 4, insurance companies, work with them to really understand what are the challenges that they face. So when we formally release the stress testing exercises for a bigger pool of financial institutions, we already know, right, some of the challenges that we will face, and we can help them throughout the process. So it's also a different kind of an approach. Now, when it comes to taxonomy, when it comes to mandatory TCFD disclosures, these are coming, and we expect those to come. And lots of financial institutions are actually in Canada, they're not waiting, for Canadian regulations. They have already started thinking based on what they see in Europe, because they say it's very likely that what will come in Canada will be informed by global regulations or European regulations. So, which is great to see, right?
And also institutional investors that are global, because they have to meet these regulations in the European market, are just saying, well, we're just going to roll out the practices across our operations. It'll be simpler. And the one thing I would add in terms of regulations is, ISSB are standards, they're not regulations. But who's watching the ISSB is IOSCO, the International Organization of Securities Commissions. So the SECs and the Canadian Securities Administrators and all other securities regulators across the globe. And they're basically saying, we're following this closely with the view to endorsing them and recommending to all the national securities commissions to make those mandatory for disclosure, corporate disclosure. So that combination of regulation and standards is
It's key.
hopeful, and I'd like to think likely. Yeah.
And we've been talking about climate, but there are other ESG issues that Canada, like companies are having to disclose more information around. Diversity and inclusion is one.
Absolutely.
And there has been, reporting in the US, whether or not a company discloses, shareholders push for greater disclosure. In Canada, there's been greater requirements around diversity of senior executives. So there is push for more ESG data. And so there's progress being made. It's slow. Investors are trying to fill in the gaps, and that's another way to push companies to do more. We're trying to figure out ways to, and this is maybe something that I put to you guys in terms of diversity and inclusion data. That is another area where we could get more information. Right now, employees, it's voluntary to disclose. So in order to assess a company's board, we have to rely on different pieces of research. Right now, we use one provider of data, but there are gaps, and they try to fill in the data because of a lack of disclosure. So if they get it wrong, and the diversity is actually better at the company than we think looking at the data, it's incentive for the company to start disclosing. So if we don't have the right piece of data, please help us better understand your diversity.
Yeah, no, that's actually something that I wanted to touch on. I feel sometimes we talk a lot about the climate aspect of the ESG and fintech or the financial sector. Diversity is definitely one of them. Financial inclusion is a big one as well. Do you think that there's, other than this self-disclosure, what other opportunities can we do to improve the sector other than the climate risk? Can a company be good at doing all ESG? Is it possible, or are we better focus on one at a time?
On that point, we're expecting that companies do well on all three in terms of how we engage companies, because if they're doing well when it comes to environment or social, then it's likely that their governance is intact. They have the proper mechanisms to ensure that they're disclosing the right information, useful information that investors want to see. And that includes diversity and inclusion, but there's other elements of environmental beyond climate, some interrelated, but there's I think that when it comes to a company, how well they do on each of those pillars, we're really pushing all three.
No, go ahead. I realized we started the conversation kind of in the middle, assuming everybody knew what ESG was. So maybe I'll take a step back. ESG is an acronym. It's a three-letter acronym for environmental, social, and governance issues. Obviously, it is an umbrella term for many different things that are not necessarily related. Everything from energy efficiency to pollution to waste management, water consumption to health and safety, diversity, equity, and inclusion, pay equity, gender equity, to cybersecurity, bribery and corruption, ethics, culture, remuneration. Runs the gamut. Not all ESG issues are material to all companies. So yes, companies are expected to manage their material issues well. What are material issues? Issues that affect depending on your perspective, and this is where it gets complicated. Everything's complicated in ESG and sustainability. issues that can affect the company's operating and financial performance and its risk profile and its long-term ability to conduct its business and its reputational capital. All of those aspects, a lot of those are intangibles. Any issue that the company that could affect those elements of the company's performance or value creation are considered material issues and should be issues that the company manages. And then if you want to take the conversation to another level, which is impacts that the company has on the environment and society, that's when you start to talk about impact. That's when you start to talk about sustainability. Increasingly, companies are being tasked to take those into account, to measure those, because investors care, because they are having an impact on systemic risks that are affecting us all. So whether it's climate change, that's a really good example, but biodiversity loss is another one. Water is another one. We're very fortunate here. These are not top of mind issues for us, but in many, many areas in the world, they are. And actually, as a matter of fact, the city of Quebec is on a water advisory, and they're limiting water consumption, and they're limiting not mowing, but watering your lawns, because they've had many episodes of having very, very low drinkable water levels. This is the city of Quebec, in Quebec, where we have the largest proportion of drinkable water in the world. So it can happen everywhere, right? So that's ESG in a nutshell. And so, yeah, companies need to know what issues matter to them, focus on those. Those are just business issues they need to manage. And it has everything to do with their ability to conduct their business.
Yeah, and then we talk a lot about, how to measure, how to report and all that, but it's also embedded in your culture, right? Because it has to do a lot with that. So if you embed ESG in your culture, in your long-term strategy, it's very likely that you will have targets and, across all ESG, right? So it's very likely that we'll see institutions that make commitments around ESG performing well against those, depending on what is considered material to them, right? So it has to do a lot with the culture of the organization, changing mindset, changing behaviors. So we focus more on long-term value creation again, rather than short-term gains.
Absolutely. We're near. Oh, you wanted to add something, Vanessa?
I just want to give an example in terms of how they're intertwined. Like when it comes to the low carbon transition, it's going to require more workers to be focused on that transition. Companies that need to be part of that transition have to reskill or attract the talent. So they have to have a corporate culture that company or employees or prospects want to work in. And it's even more critical because of the record low unemployment rate. So it's all interconnected. If you want to address this climate issue, you have to think about what business dynamics for us, our portfolio companies have to attract the talent to adhere or to meet these challenges. And corporate culture, you can think of it as social. There's elements of social and governance. And it's important that the companies in which you're invested in are thinking of all of that at the same time.
Absolutely. Thank you. We're nearing the end of the conversation. So if anyone has questions, get them ready. People online, if you have questions, get them ready in the chat. I just want to have a final question in regards to what was just discussed. If there's one action in terms of strategy that companies can implement to entice their employees to be on board with their ESG strategy, can you name a specific, just one example? I know, Marie-Josée, you have plenty that are coming to mind. Just pick one. Just pick one. One action that employers or directors, managers can do to entice their employees to be on board with ESG strategies.
I can say that, like, we're in the middle of proxy season. So as shareholders, we exercise our right to vote. And right now there's annual meetings, and there are proposals from management and shareholders. And some shareholder proposals have pushed for greater ability for employees to voice concerns. And I think that is one way that employees can sort of feel a part of their, like, that ESG is moving forward and they can be a part of that. So I think just getting your company to value the input of their employees.
For me, it's a lot in this area. It's a lot around education and training, right? Making sure I hear it all the time from our clients. We don't know what we don't know, and things are moving so fast, right? And it's the same, for people within the organization. So making sure that you take the time to, educate your workforce and your leaders around what do we mean by climate risk? What do we mean by ESG? How does that link to our strategy? How does it link to new products, right? And then also maybe run some team-specific training, right? For the technical teams, how do we run stress testing? For finance teams, how do we, manage our portfolio exposures? For commercial advisors, how do you engage with your clients and you have the appropriate conversation? So it's a lot around engagement, training, upskilling. And because if people don't understand the bigger picture and how it will eventually translate into their day-to-day work, it's very hard to get motivated or, raise their hand that, this is an area that I want to be involved in, I want to support our company. To meet the targets and objectives. And exactly as you said, back to your point, record low unemployment, and it's very hard to identify talent in this area, right? So finding resources internally that are motivated, they want to, contribute to your strategy is going to be key. And that's coming through training, education, regular communication.
I would flip your question around because I don't think the problem is in the board and C-suite motivating the employees. I think it's in the employees getting the board and C-suite to wake up and change their mindset. The first thing that needs to happen is a change in mindset. It's understanding what this is. It's real. It's risks and opportunities. It's business related. There's also a fiduciary duty, legal liability aspect to the boards considering some of these systemic issues, starting with climate change. And that is the single hardest thing to achieve in a company, because a CSR team, an ESG team, even employees willing, able, wanting to work for a responsible company, if it doesn't start from what we call tone at the top and the board, it's not going to happen. So it's mindset shift of the board, and from there, everything else is possible.
Thank you so much. That's great. Is there any questions? Don't be shy. Go ahead.
Elisa Schaefer from McGill. I wanted to ask about how normally stuff like decision making and kind of planning has been data driven in the sense that we try to get like trends and patterns of what's been happening before, but we're expecting climate change to be unprecedented, disruptive. How much does this change kind of like the separation between best and worst case, expected case, like how big are the risks? Do the present models and methods kind of like lend themselves to dealing with having earthquakes in places we've never had earthquakes before, having water shortages in places that aren't supposed to have water shortages? Like, how do we deal with things that aren't in the patterns because this has never happened before?
And this is where scenario analysis, right, comes to place, because we acknowledge that we don't know what it will happen, but we want to have an understanding about the range of possible outcomes. And the way to understand the range of possible outcomes is through different scenarios. Going back to scenarios, though, there is a lot of work that needs to be done there. For example, the feedback that I hear from our colleagues in the UK is that although the UK, the Bank of England, they run this type of stress testing exercise, the scenario is so unrealistic that the output doesn't make sense, right? So I think one of the assumptions of the CBEST scenario is that 70% of all UK people will be vegetarian by 2030. So this is unlikely to happen, right? Again, scenario analysis helps, and we always need to think about transition risk versus physical risk, because some of the events that you describe focus more on the physical risk side. But of course, we need to be prepared about transition risk, right, and run alternative scenarios where in some of them we'll meet our net zero targets, in some of them we won't, right? In some of them we'll make decisions on time. In some other cases, we will be late in the game. So, and really understand what the impact will be in our portfolio. Again, we talk about financial losses in here, but yeah.
I'll just add that there are collaborative efforts that are thinking through these questions and looking at the available data. And some physical risks, for example, there's not enough data for it to really be informative. But I think with the release of TCFD, their ask for climate-based scenario analysis, there was some challenge in terms of, okay, well, it's so complex, it's going to be difficult to do, but I think the mentality and the direction is that even though we have some imperfect tools, we have to move forward to perfect them. And so we're just pushing forward so that we can have some idea of the risk in our portfolios. And those tools will only be fine-tuned as we question their methodologies, their assumptions, and we utilize them.
Yeah, I would say, or I would add, first of all, there is obviously a lot of room for improvement. That's why so many companies are coming into the climate data space, whether it's big data or company data and other sustainability related issues. I would add, though, that there is a lot of data already out there, not perfect, but if you read the Intergovernmental Panel on Climate Change report, I mean, there's a lot of data in there and they do a lot of modeling. And without having exact, precise, 100% accurate information, do we have enough to get a really good idea of where we need to go or what's happening, what we can expect and what we need to do to try to avoid it? Absolutely. So absolutely, it's scenario planning, scenario analysis, modeling for sure. But there's another saying we hear often is don't let perfect be the enemy of good, which is a lot of people get frozen into inaction waiting for perfect data sets before they do anything. We already know enough to know when it comes to climate change, we know enough to know, what we need to do. So there is already a lot of data. Yeah. So
I really like the point that you raised around the fact that, we have enough information to initiate our journey. And actually, some of the regulators or standards that have come out, such as PICAF, the Partnership for Carbon Accounting Financials, they do state that, we do understand that data is a huge limitation in that area. And that's why, to improve transparency, they have introduced 5 different data quality scores. And they say, go ahead, calculate your emissions, but then tell us what is based on verified data versus proxies, right? So, and companies now, they're using that to show also progress over time. For example, now maybe 70% is based on proxies. Next year, it might be 50%. So, it's a work in progress, but it's a good starting point, right?
Yeah, I have a follow-up question, because we've been focused a lot on carbon output and climate change, but Marie-Josée, you mentioned like biodiversity. What type of methods are in place right now to measure the impacts on biodiversity, for example?
I was going to say not too much, but that's not true. Like everything else, we are awakening to these areas of expertise that have actually been around for a long time. I'm always, surprised and humbled by stumbling into things and areas where people have been working on this for the last 20 years. So I think there are data sets. Biodiversity is orders of magnitude more complicated than climate change, obviously related to climate change, measuring different things, a lot of it having to do with natural capital. You start to get into dependencies and impacts. There's already a big body of work that's been done over the years. Does more need to be done? Absolutely. There's a lot of work to put a dollar value on natural capital, not because that's the value we attributed, but you have to start thinking of dollars as a unit of measure, a common unit of measure that allows you to compare things and make decisions accordingly. It's not necessarily that that's the ultimate value that we assign these things that really have no value or invaluable, right? Anyway, so I'm not a biodiversity expert. It's an area we've just started looking into in more details. I encourage you to look into what already exists, and there's still so much more that needs to be done.
And into the tools that we use, so we use some of the large ESG data providers. And one interesting tool that I've come across is a tool that has multiple different data providers that are fed into the platform, and the users can flag which ones are most useful. So with biodiversity, for example, I've seen data. I don't like it's not as complete as I need for making like calls when it comes to our investments and how well companies are performing. But I think when there's some instant feedback loops where I'm a user of the data and I can say that I found too many issues with that data point and maybe divert to this provider. So I think that as like there might not be enough on biodiversity, but I think that putting more out there and then having some of these interesting tools where we can give feedback on how that data point has served our use.
And just to follow up, by the way, the Task Force on Nature-Related Financial Disclosures, which is mimicking the Task Force on Climate-Related Financial Disclosures, is underway. They're going to come out with a disclosure framework. There are other GRI in Europe and ISSB are also going to be coming out with biodiversity disclosure standards. So the alignment of the data that is going to be required for companies to disclose is also going to improve. Yeah.
Friends online, sorry, you can talk to them after. If they're kind enough to stay with us to grab a drink. But we have a question from Lawrence online who'd like to know some tips and recommendations for an undergrad students to be more active and make a contribution in this space rapidly. That's a tough one.
No, that's great. And actually, I support a lot of the universities. And, what I usually tell them is that, lots of them, how can I end up in sustainability career? What should I do? And you can clearly see from this panel, we have completely different background in terms of academic background, career experience, and all that. So as long as you're passionate, you take classes relevant to that, you take courses, and you're motivated in this area. And I always say, don't look, for a job that in the title it says, sustainability expert, sustainable. And it touches so many areas that it's just around, being motivated, then initiate your career journey and raise your hand when the opportunity comes. And then this is how you can end up being in this area. But it's always, every time I'm in a panel related to ESG, it's so interesting to see the background. It's never the same. There is not just one way to end up in ESG.
And I think when it comes to opportunities, there won't be a shortage of opportunities for people that are sustainably aware and they look at problems in a sustainable way. So I think that is what I've encouraged others to do, is approach a problem, see where you can do it sustainably, maybe different from the status quo.
Mindset. It's an individual mindset and it pervades everything you do. Absolutely. And completely agree.
Thank you so much to the three of you for joining us this evening. Thank you all for being so attentive tonight. So yeah, this ends our Fintech Drinks. So now we will resume the networking.